Good evening, guys. This is Jinx. Welcome to my channel. I thought of discussing various chart patterns, and today we are looking at a head and shoulder chart pattern. So basically, the chart pattern, when you look at your, the way the prices are moving, it indicates the activity between a buyer and a seller. So this is kind of very popular chart pattern, and everyone would be looking at it. So and historically, when this appears, let's say this is a regular head and shoulder. So most head and shoulder will have a peak, three peaks. One peak is taller than the other two, so those are the shoulder, and the tallest peak is the head. And so where you can, like, literally connect them you can connect them at the neckline, which is here. So this neckline, if it's a regular head and shoulder, that would be a support. So what happens, the price goes up, comes down, goes really up, comes down, and then it goes up, and it's usually, you can write a so this would be like a resistance line. It can't go beyond that, and it's not breaking the second head. And so this would be the support line. So what this chart indicates is that if the second head doesn't exceed this previous second peak, doesn't exceed the previous one, it's gonna break the support over here, and it's gonna show a downward trend. So let's say we were thinking it's going up, it's gonna go up, and it's gonna go up. You were expecting a bullish trend. When you see the when you see this head and shoulder pattern, this basically indicates that the market is gonna go down. And here, when you see a bearish head and shoulder, so it may not be always horizontal like this. It could be like slightly slanting head and shoulder like this. So when you see this head and shoulder forming in the reverse way, so this would indicate that market would go from a bearish market, and this is the neckline, which is the resistance line at the moment. So in here, this neckline is the support line, and in here the neckline is the resistance line. So this is gonna break the resistance, and it's gonna go into a bullish market. The bear to bullish is the reverse one, and the regular head and shoulder is bullish to bearish. And where did I get the theory from? So you can go to Investopedia for all the, I'm not a very description and that kind of person, but I do reading from Investopedia, or I would ask ChatGPT. So here it says, takeaway, head and shoulder is a technical indicator, and there are three peaks. It's quite reliable because every trader is looking at this. So because everyone is looking at this, when it, let's say, where were we? So because every trader is looking at this, when it hits this point, everybody will try to sell it down. So that's why the things would go down. Or when it goes here, people would speculate it to go up, and everybody are doing the same thing, so it pushes the price up. And in Investopedia, like, it's giving, and the neckline can be support or resistance depending upon the pattern. And I asked the same question to ChatGPT. So you can decide on the entry, you can decide on the stop loss. It can help you take profit. So in a bearish, the volume generally tends to go down when you see a head and shoulder formation. So, and I just want to show you one more. So this is Finviz, and in Finviz, let's go to Finviz. I'll open a fresh one, and Finviz. I just want to show how you can spot the pattern in Finviz if you're looking for this particular pattern. So go to Finviz and go to Screener, and here you have the technical. So click on that, and in here you have pattern, so click on that. So the usually what I use is channel up, and I try to buy the low, and because it's channeling up it tries to go up, so that's where I try to send. So this is very useful for me. But if some particular people are looking at head and shoulder, keep going down, see you have head and shoulder and you have inverse head and shoulder. So go to head and shoulder, and not everything is very clear. Like here you had one here and there was a peak. For me it doesn't look like an inverse head and shoulder. Maybe they're talking about this particular spot. Look guys, chart, the way you decide what is very personal, but generally people tend to see, so let's say at this particular point you were seeing it was going up, the first peak, it went down, it went really high, and then it's coming down. So according to me, here there would be a resistance line, and because this is and this would be considered like a neckline, or you can draw a neckline here or you can draw a neckline here. So it's very personal. So according to me, it went from this spot, had a small shoulder, then it became the head, then it came down and there is a shoulder again almost like here, and so from here it's expected to go down. But when you look at the overall trend, it's kind of going like a channel up pattern, but in here you can see the head and shoulder pattern. Let's go see some more examples from this filter. I actually picked up one AM, maybe this one. Yeah, here there is clear head and shoulder formation, and so there is a left shoulder, there's a head, and there's a right shoulder, so it is expected to go down. So I think that's how they use it. Basically head and shoulder kind of represents, when you see three peaks, it kind of represents pattern reversal. Like if it is going up and you see like a peak here, and the third one is not exceeding the previous one, that means it's gonna go downwards. There is a trend reversal here. And similarly, let's go back to screener and technical, and let's look at some of the reverse head and shoulder. So the inverse head and shoulder, let's go to something and have a look. Ooh, I don't see any 3 points. Maybe someone else who's more skilled can recognize, but pick up a chart where you can clearly see the three shoulders. So let's go here. So what happened? So they're looking at this point. So there was a peak, it came down, it went up, came down, and it's going up. So okay, that looks like a normal head and shoulder to me. But let's look at this one. There was a peak here, down, went down. No, it's not clear. So let's look at something else which is more obvious. Yeah, so when there is a W formation, it kind of indicates, excuse me, add. So when there is a W formation, it kind of indicates the pattern is going upward like this. It says it can go upward, but if there is another like a M formation, like not M, like you know what I meant, this shoulder and something like this, shoulder, head, and shoulder, but this is like equal to the head. So that shows a downward thing, but when you see there is like a W-ish kind of formation, it kind of shows the trend is going to go upwards. Now it was going down and it's going to go up. A lot of the charts, guys, I'm a newbie, I'm also trying to understand it, and you just need a lot of practice to understand, and it is also quite personal. What you can take away from this tutorial is a normal regular head and shoulder shows a down, would show you that it's gonna go down and you have to sell, and a normal that's what most traders are gonna do. And when it's a inverse head and shoulder, it's gonna indicate a bearish market and people can buy and try to sell it higher. That's it for today, and that's my understanding. Have a lovely day. Thank you. Bye bye.